Michael Saylor is getting massively celebrated by the Bitcoin community. He is pumping our bags, he's buying up more and more Bitcoin using debt financing. The question is there potentially a risk to all of this? Could this all implode? Let's have a look at some data most people are not considering. Now here's the Bitcoin price chart together with MicroStrategy's accumulation. Initially, the company just bought Bitcoin with its cash reserves, and it did this very conservatively. A few thousand Bitcoin over here, a few thousand Bitcoin over there, everything quite predictably, a relatively steady increase. But then the Bitcoin price together with the MicroStrategy price dropped, and the accumulation slowed down a lot. So the balance didn't rise that quickly anymore. And that's a potential problem with that strategy. Because MicroStrategy's value is now mainly its Bitcoin holdings, when the Bitcoin price is going down, the creditworthiness of MicroStrategy is going down as well. Thus, it's very hard for the company to buy bottoms. Per tendency, the company has to buy when the price has already risen. And this is what we can already see historically, as the price rose, there was more and more frequent accumulation. Once Bitcoin got close to 100K, the accumulation really accelerated. And that's all driven by debt. The first purchases were just made through company income and through the balance sheet, basically the cash that was readily available. And then over time, things became more and more risky. There's more and more credit now floating through the system. And to a degree, MicroStrategy becomes more vulnerable to Bitcoin's future volatility because of that. Just have a look at how much capital the company raised over time. It used to be a few hundred million here and there, but in the fourth quarter of last year, the company raised 18 billion just to purchase Bitcoin. Now, when a lot of Bitcoin is bought, when the price tends to already be quite high, because that's when there's most creditworthiness, when that's happening with a lot of credit, the average cost basis of an individual Bitcoin held by MicroStrategy is also going up. Have a look at this. The blue line is the MicroStrategy Bitcoin cost basis. And we've got the Bitcoin price for reference in black. So when Bitcoin moved from 67K down to 31K, that's when MicroStrategy suddenly was in unrealized losses. But it took more than a 50% decline in the Bitcoin price. The company continued to be able to serve the debt, so it was no problem that there was negative equity. It's still fine. The company's debt cannot just be randomly recalled, so as long as interest payments are made, everything is okay. And after a dry period of a bit over a year, the company got in profit again. But have a look at this, right? When all of those additional Bitcoin got purchased with all of that additional debt, the average cost basis jumped from 39K to currently 70K. So before, it took more than a 50% decline for MicroStrategy's position to turn red. Now it only takes a decline of around 40% for MicroStrategy to be in the losses. So we see the accumulated Bitcoin here at the bottom, and we see how many of those Bitcoin are in losses versus in profit. We can also just look at the ratio, how many of the Bitcoin are currently in profit or in loss. This bottomed at 29%, but again, that was after a massive bear market where we went down to 16K, right, from 67 to 16. But with a rather minor correction recently, already half of MicroStrategy's Bitcoin were in losses in April of this year. So the company now is much more risk on with its Bitcoin holdings. It has much more exposure relative to its value. It has survived a prior crash, but it will probably not survive a crash that's even larger than what we saw in 2022. As an investor in MicroStrategy, we are basically now buying more and more a levered kind of Bitcoin. So we get extra exposure to Bitcoin by buying MSTR over BTC. Have a look at the maximum drawdown from the all-time high for Bitcoin itself, so that's in orange, and for MicroStrategy, that's in red. MicroStrategy has always been a bit more risky than Bitcoin. It tended to go down more when the price of Bitcoin declined. But it seems like recently that risk is even increasing further, right? It's dropping now double as much as Bitcoin. And in the past, it was only a few additional percentage points. Have a look at this. At the top, we see the MicroStrategy stock relative to Bitcoin. So we look at the MicroStrategy stock, divide this by the Bitcoin price. At the bottom, we just see the Bitcoin price. Now, if our theory holds that MicroStrategy is now a levered Bitcoin, those two charts should look similar, because when Bitcoin is going down, MicroStrategy is going down even further because it's levered. And when Bitcoin is going up, MicroStrategy tends to go up even further, again, because it's levered. And the tendency seems to be true. When Bitcoin bottomed, MicroStrategy was rather low, and it did outperform buying and holding Bitcoin by 266% since BTC recovered. So in the end, a lot of the Bitcoin price appreciation is simply more leverage added to the system, again through debt held by MicroStrategy. Now, so far this worked out very well. Every company that adopted Bitcoin and held it on their balance sheet tended to outperform. Now, the impact of those purchases is massive. What we're seeing here is the ETF demand and the demand by MicroStrategy, Metaplanet, Semler Scientific, so the companies that currently add Bitcoin to their balance sheet. In the last 1.5 years, we saw 1 million worth of Bitcoin bought by those entities. The ETFs bought roughly the same amount as those companies did. Now, 1 million Bitcoin is 5% of the entire supply. If we continue to see this in the future, if we don't see a deleveraging of that, and if all of that additional risk that has entered the market will not suddenly blow up, then the price is likely going to continue to appreciate very, very quickly. It's very hard for an illiquid asset like Bitcoin not to appreciate by 20, 30 or 40% per annum when that much of the supply gets locked up over time. This accumulation is very constant. There's very little selling happening. And that's true for the ETF, but that's of course also true for all the companies that continue to acquire Bitcoin. It seems like the institutional buying always comes last. It seems like the big guys, they tend to buy when the price is high. That's when the creditworthiness is the highest. They tend to FOMO in. We have seen this also in the past. Now, we've already talked about MicroStrategy buying very close to the top. They continue buying afterwards, but again, most purchases happen when the Bitcoin price hits a new high. We see the smaller companies with a similar purchasing pattern. Again, when prices are high, the other treasury companies tend to also accumulate more. But we've seen a very similar pattern in November of 2021. So the market heated up because of retail. The Bitcoin price went from 3.5K all the way up to 60K. Then retail started selling, and then the institutional investors created the secondary run-up. Now, why do I say that institutions bought over here? It's because the number of active addresses at the time, that did not see a new high. So let's zoom in here. More and more active addresses as people entered the space, more and more people learned about Bitcoin and wanted to buy it. Then this crashed down as retail started selling, and then the number of active addresses did not hit a new high, while the Bitcoin price did. So it was simply just larger buyers that pushed up the price here. I think something very similar is going on one more time, because the interest by the retail investor is still very, very low. YouTube views are rather low, active addresses are rather low, but the price is high. And again, it's because of ETF purchases and MicroStrategy purchases. The number of active addresses has not reached a new high. It's rather low. And the search interest for Bitcoin over time is also rather low. Yet we see the continued purchases by big money, and that's partially on credit. There's clearly a connection between the ETF flows and the Bitcoin price. So this is a correlation plot. On the y-axis, we've got the Bitcoin price performance in the last 7 days. And on the x-axis, we've got the ETF flows. So when money is flowing into Bitcoin, the price tends to go up. Surprise, surprise. When there are outflows from the ETFs, that tends to be a decline. But over the long term, we tend to see more and more accumulation. Now, what's important with all of this is that despite the purchases by the ETF and by Michael Saylor, that we're still going to see bear markets every now and then. Because again, the liquidity that's available to those institutions is directly coupled with the Bitcoin price. If the Bitcoin price is low, then Michael Saylor cannot raise more money to buy the bottom. And so when momentum flips and suddenly the long-term holders take profit and the price trickles down, it's not going to be Michael Saylor that's buying the bottom. Then it will be again retail investors that buy the bottom. This is also what happened in the past. So again, let's zoom into the last few years. We saw already purchases by ETFs and by Michael Saylor happening in 2021, but very little happened here at the bottom. Yet the market did find a turnaround. Michael Saylor did not create that turnaround. he didn't buy much. The market as a whole, though, was under the realized price. So most people were in losses, including Michael Saylor. The market participants that bought over here was not the institutions. They already bought here. The people that bought here were the small guys. Have a look at the number of addresses with 1 Bitcoin. They tend to not buy that much during a bull run. They tend to rather take profit, but they are buying as the price is going down. So just have a look at how the number of Bitcoin addresses with at least 1 BTC went up massively by roughly 25% when the price was low. And then once we recovered, those people tended to sell. So the retail investor simply tries to time the market to a degree with success. So there is some kind of a wealth transfer effect from Michael Saylor to the retail investor. The retail investor tends to sell high to Michael Saylor when he is very credit worthy, and he tends to then buy when the price is depressed and Michael Saylor cannot buy anymore. The number of small wallets is going up when the prices are depressed. And that's then what stops the bear market. And that's then what bails out Michael Saylor as well. And so the institutional money is the necessary evil. It's the cause for the Bitcoin price to hit new all-time highs to get those crazy valuations. But to a degree, they also increase volatility because, again, they tend to push up the price even higher as we are already elevated in the price. The best time to buy, of course, is when we are below the realized price. Are we getting there anytime soon? By the way, it's currently at 47K. I'm not sure. But at least we should have some money on the side, or maybe in other asset classes that we can then deploy towards Bitcoin as it goes down. The long term is clear, the accumulation is strong, it's fast, and it's very consistent, but that might not spare us from future 40, 50, 60% price drops. It's very possible that at some point in time, Michael Saylor will be again below his average cost basis. But as long as enough retail investors then buy up the bottom, everything will be okay. It can be the retail investor or it can be the ETF investor. We still see adoption from Wall Street as well. Now, fundamentally, the problem is that returns are very much concentrated in a few assets. Most assets tend to go down, and there are a few altcoins that make the multiple X return. And the problem is those assets change over time. What worked well yesterday might not work tomorrow. And so it's always a game against the odds. And so we can't really deploy a lot of capital in those trades. If the likelihood of losing is very high, it means we can't deploy too much in the position. It also means we can't necessarily diversify, because if we now own 10 or 20 tokens, most of those tokens are losing. And if then the few outliers make up for all the losses is a completely different question. It's very unclear. Now, there is a way to make money a bit more consistently, and that's actually trading the larger tokens. The issue with the larger tokens, though, is that they move very much in tandem with the overall market. As in, when Bitcoin goes up, and Solana tends to go up as well, Ethereum tends to go up as well. But there are movements within crypto where sometimes a particular asset class is more preferred than another one. And we can play on that relative valuation. We can play on attention moving from A to B within crypto without having to try to find the few winners. For example, have a look at this. This is the Solana dominance. So how much of all of crypto is currently in SOL? And there seems to be somewhat of an invisible ceiling between 3 to 4%. This is where Solana historically had been very expensive. Or have a look at this. This is the Ethereum dominance. It tends to be very cheap when only 7% of all of cryptocurrency's market cap is in ETH. It tends to be expensive when it's around 20 or 21%. And so we can benefit from this independent of where the US dollar valuations go. So if Bitcoin is going up or down does not interest us. The only thing that interests us is whether or not Ethereum will perform better than Solana, or Solana will perform better than Ethereum, just relatively speaking. So I saw that set up when Ethereum was extremely cheap in the middle of April. We got very close to the historical low that was formed in September of 2019. And so have a look at this. This is Solana relative to Ethereum. And when ETH hit that low point, I shorted Solana relative to ETH. So I was not interested at all in the Solana US dollar price or in the Ethereum US dollar price. I was only interested in the relative valuation. I saw we are high on the trading range and I bet on that range coming down. So here's that post. It's from April 13th. I'm opening a relative valuation chart of SOL to Ethereum using Venus Finance. More information will be provided in a few hours in today's premium update video. So I publish premium updates every 3 to 4 days. And then on May 20th, I closed the position. And of course, other members made money with this as well. But I want to share something here. This is when the position was opened. Here is when the position was closed. And I want you to look at the Solana value. Again, we bet on Solana doing worse than Ethereum. Solana itself actually went up during the time. It appreciated by 25%, but Ethereum appreciated more than that. It went up by more than 50%. And so we completely canceled out the macro. We are not interested at all whether or not everything is going up or down on a given day. We made money just on the relative valuation. So within those few weeks, we went from 43K to almost 60K. Yes, I know these kind of strategies might seem a bit complex, and why don't we just buy an altcoin and make it 10x? But again, it's all about risk-adjusted returns. If we want to bet significant capital, tens of thousands of dollars, or let's say relative to your net worth, high percentages. If we don't just want to play with play money, but we actually want to make real gains, we need to use strategies that don't have an 80 or 90% chance of failure. I see people making these mistakes all the time. I even see people making mistakes with their risk off position. So let's say they don't want to be exposed to crypto, they just want to be in stable coins, that those stable coins just stay laying in the wallet. But there are opportunities to make very nice constant returns even with stable coins. So this is 16% APR. This can be achieved on Hyperliquid without a single trade. This is all just automated arbitrage by the market maker. But of course, I've also got my risk on part of the portfolio. And here's something other people don't show. Most people just show individual trades and say, hey, this is how we always make money. Very few people are actually willing to share their overall portfolio performance. Now, I started trading on Hyperliquid on April 22nd, and here is my P&L over time. And since I'm sharing all of my trades, the members can just copy me. And this is actually very nice feedback. The same kind of portfolio development chart. This chart tells a story, first trying it without any support, and then afterwards, where this green arrow is shown, exclusively following Gerhard's trade and slowly digging out of the hole. If you've got the right risk management in place, there's actually a lot of money to be made in this market still. But actually, I don't want that everybody is just copy trading me. The community is about elevating our skills. It's about learning as much as possible, helping each other, finding market opportunities, and then of course capitalizing on those opportunities. So I've actually made more than 100 tutorial videos just on various topics within crypto, risk management, portfolio valuation, blockchain analysis. Feel free to binge watch this. It's actually nice to get those DMs. Hey Gerhard, I just wanted to thanks a lot for everything you've done. Since I've only been listening to you, I've been consistently profitable now. I just entered your, I've blacked this out, XYZ position as well. Or here, this is also another nice message. I'm not going to read through all of this. Feel free to stop the video. But yeah, if you want to join us, if you want to copy trade me, if you want to learn more about crypto, feel free to check it out. It's currently $125 per month. The price has actually been lowered because now the attention on crypto is much lower than it used to be a few months back. Once the masses come back in again, then the price will be back to $165. So if you're signing up today, you will never pay a higher price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.